Are you ready to take your first steps towards financial freedom by investing in property? Whether you're a first-time investor or you've started your portfolio but need some help continuing to grow, 2022 REB Buyer's Agent of the Year and Rising Star finalist Lachlan Vidler and his team at Atlas Property Group are here to help. As experts in property investment, Lachlan and his team are ready to help you take your next step in growing your portfolio. By completing the research, sourcing and negotiations, Lachlan goes the extra mile to find you a high-performing investment property. Visit atlaspropertygroup.com.au to book in your discovery call absolutely free of charge.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello, everyone. Welcome to a brand new episode of the Smart Property Investment Show. Grace Ormsby here, and I'm joined via Zoom, still operating in a COVID-safe manner, by Juliet Helmke, our journalist here on Smart Property Investment. Juliet, welcome to the show.
Thanks so much. It's great to be here.
It's been a little while since we've done an episode together, hasn't it? Like, we did one in the lead up to Christmas and looking towards 2022 and what was coming. And can you believe it's already March?
I know. And with the way that the past couple of years have been going, in the past few months alone, it feels like so much has happened that we have to talk about. So it's good to do an update.
Absolutely. We got together and we thought, hey, it's about time where we give the listeners of Smart Property Investment a little bit of an update on what's going on in the world of editorial over here at Momentum Media, Smart Property Investment, on our website, smartpropertyinvestment.com.au, what we're seeing playing out, property market trends and what's going on in the wider industry in an economic sense, because obviously that does play a role in what happens in the property market. And Juliet, the first topic that we're going to be discussing today is the RBA cash rate decision from March, where they did keep that cash rate at its record low level of 0.1%. And
not a big surprise there, was it?
No, I think we all saw it coming, but it does come against a backdrop of a lot more discussion that 2022 would be the year where that cash rate does change.
Absolutely. Yeah, we're hearing, the earliest possible, probably around August. Otherwise, November is probably far more likely, and kind of what, the commentators are really looking at right now, feeling like that's probably going to be the time when, wage growth and a number of other factors are making RBA feel confident about kicking that up a little bit.
Yeah, it is interesting too, because we have seen so many bank forecasts around what property prices would be doing this year. And a lot of them were predicting a cash rate rise would occur a lot earlier than previously anticipated. But RBA has kind of, reined back in that expectation a little bit recently. Obviously, we did see wage rises see a significant increase across sort of the last quarter of 2021, even with Omicron kind of causing a quasi lockdown, which, none of the governments really wanted one, but people weren't going out and about. And that stalled things a little bit. We've also seen a lot more, just geopolitical and environmental factors that probably have started weighing on those leading economic indicators. And we're going to get to some of those, but I think it's safe to say we've got a little while yet.
I think so. And you can really tell with the way that RBA is communicating. They're trying, even with, as we mentioned, some banks coming out and saying, oh, it could happen sooner than you think. They're really putting in a concerted effort to let everybody know it's not going to be a big shock. They're really trying to make sure that there's not a sense of instability around that and fear around that rate rise, because I think they really want to, for starters, obviously very invested in ensuring the stability of the markets, but in general, they just really don't want to create that panic that can have a trickle-down effect on everything else and make investors and homeowners and first-time home buyers, all of those sort of different demographics start to worry about what's the rest of the year going to hold. So they're really, in the way they're communicating, I think, trying to really assuage a lot of fears about how things are going to roll out when they do eventually lift the rate.
Definitely. And we were having a conversation the other week, and no one has a crystal ball. No one can really predict exactly what's going to happen the rest of the year. And I think COVID taught us all that, you can't predict what's coming or how it's going to affect property prices or, the economy at large. But I would not be surprised in the slightest if that first rate rise that we do end up seeing was something like a 0.1% again, or, a 0.15%.
I completely agree.
I don't see it being a quarter of a percentage point at this point in time.
What they're signaling is, a gradual, steady increase that will, not disrupt. The intention is to not disrupt people or disrupt the housing market in, a really intense and unstable kind of way.
For sure. And I think, it's worth noting as well that recent environmental disasters will also be weighing on the numbers that we're seeing. The Queensland and northern New South Wales floods have obviously caused a lot of damage to people and property over the last couple of weeks. And our thoughts are with everyone who is affected, because this is going to be, a disaster that kind of continues and carries through long after the water levels have receded. We're going to take a quick break there. We'll be back to be talking more about Queensland and New South Wales floods in just a moment. Welcome back to this episode of the Smart Property Investment Show. I'm Grace Ormsby, joined by Juliet Helmke. Editorial update today on the Smart Property Investment Show network. Juliet, before the break, we were talking about RBA and, what the Reserve Bank might do in the way of cash rate rises over the next year, because there has been so much discussion around this, from banks, from economists, people predicting that it would rise, people, saying, hang on, hold on a second, we've still got a bit to do. I think it's important to remember that all of this is occurring against the backdrop of the economic shock caused by COVID-19, which first began back in 2020. And there's still so much, it's going to still be a very long time before we get back to any sense of normality based off that.
I think that's true. And also, let's not forget that before COVID hit and we encountered all of that economic uncertainty, there was a lot of discussion about how our economy would fare in the aftermath of the incredibly sad and terrible bushfires that we'd experienced really not long before that. So I think there are a lot of economic factors at play. And then, as you mentioned before the break, Grace, the floods that we just experienced across Queensland and New South Wales are another major economic factor that I think will play into the way a lot of things go through the course of this year and onward as well.
Yeah, and I'll just bring up some comments made by Real Estate Institute of Queensland CEO Antonia Mercarella, who did note that the timing of this major flood event couldn't be worse. Not only will it displace tenants and owner-occupiers, but it will be diminishing rental stock. And we're going to get to that a little bit later. But, there's already so many things that have caused stress to property owners and business owners across New South Wales and Queensland for the last 2 years. And so this does feel like another nail in the coffin. Probably sounds a bit grim, but, it has been a very trying time already. And we're lumping another on top of that, which is still going to require so much, work to actually overcome, because so many people have lost everything, and it's so important to remember that. And that's going to put back that economic recovery as well. When things were starting to look, brighter again, businesses were beginning to open up. We'd sort of got past the end of any lockdowns and restrictions. All of a sudden, all these people, they may not be able to get to work. They may have lost their businesses' assets or their premises. There's going to be a lot that needs to be done with that recovery.
Definitely. And I think it's really important for everybody to remember that, these two things are obviously not existing in a vacuum. There are people who've had significant COVID losses who have now had their homes flooded and a lot of possessions lost. And also just the fact that, with COVID having really sort of wreaked havoc across the entire country and impacted things like, the rental market and housing, that this also puts pressure on that and exacerbates that as well. And we've just seen REIQ has come out and really put a strong message out there to investors, property owners in Queensland who have properties on the short-term rental market, the kind of things where they have an Airbnb going or various other sites where they can do short-term holiday rentals, or even just those people who have their holiday homes sitting vacant. They've asked them, please, if you can, release them onto the long-term property market, because we were already experiencing rental squeeze in Queensland. We already had with a lot of people moving up there, housing stock was really seeing that tightening up in the Sunshine State. And now on top of that, with the floods that we've seen and so many people losing their homes, that we really need those long-term rentals. And while, great to think sort of like maybe people can help out with short-term accommodation for those who have experienced hardship, as REIQ also noted that, the stress that you experience when you don't have stable long-term accommodation has a massive impact on your financial well-being, your stability, your health even. So while short-term is great to sort of help people, get through a really trying period, we're desperately in need of those long-term rentals up in Queensland. And I think that message has come from REIQ, but I also don't think that, New South Wales, where we've had those terrible floods, is exempt by any means. And this is one really tangible way that investors can help people in those areas. So they've put out that call. Obviously it won't be practical for everybody because it is a pretty big switch. You have to really have a look at your finances and whether that's something that you're able to do to contribute. But anybody that can, they're really imploring them to release homes onto the long-term rental market.
Very well put there, Juliet. Thank you for sharing that. We're running that story on Smart Property Investment over the next day or so. Check it out. It's well worth a read. It also harks back to a conversation that I was having with the Real Estate Institute of South Australia CEO, Barry Money, last week. And he was imploring people in South Australia to consider, or, investors from elsewhere that maybe were looking to invest in South Australia. He's like, it's a social investment as much as it is an economic one. Mm-hmm. And that was, not even looking at the fact that South Australia's got quite a strong property market at the moment, but there's no natural disasters there. But, maybe we are reaching a turning point where we need to be looking at investments as not just having an economic purpose. They can actually have a social purpose as well.
Yeah, definitely. And I think at a time where, I have been so fortunate. You've been so fortunate, Grace. I mean, we're in New South Wales, but we're sitting in, dry homes, and we've just been really spared from so much of this, except for a little bit of wet weather, which, really cannot express how lucky we've been. And I think a lot of people are in that position and they're looking around going, what can I do? Obviously monetary donations are great if you're nearby, getting out, being part of the mud army, that sort of thing. This is one really tangible thing that a lot of investors can do in those areas. But we've been seeing tight rental markets across the country. It's something that, we're constantly talking about, that there are massive housing issues. I mean, we talk about it, especially in relation to Hobart as well, where Hobart and Launceston, where those rates are, increasingly squeezed well below the 1% mark. And I think you're right that having that conversation about the social, I don't necessarily want to call it responsibility, but the social contribution that you can make as to how you use a property if you're fortunate enough to be able to have one that is available for short-term rental, long-term rental, or a holiday home, I think is, an important conversation to be having across the country.
Definitely. We're going to take another break there. We'll be back soon with more from the Smart Property Investment Show. Welcome back to this episode of the Smart Property Investment Show. Grace Ormsby here, joined by Juliet Helmke, an editorial update for you all. We've talked about the RBA cash rate and, the economic considerations that are being talked about at the moment in Australian politics. And obviously, we'll get to it at some point as well, Juliet, but the federal election is looming at some point. But before we do, we were talking before the break about the floods that are affecting a large part of Queensland and New South Wales. And I do think it's important to point out to anyone who is impacted by those that there are support services that are already available. This is for landlords and tenants, as well as any, real estate businesses, property managers who are working in those areas, as well as, residents, small business owners, farmers, there is Australian government disaster payments available where especially eligible tenants may claim up to $1,000 per adult and $400 per child. There is the Australian government disaster recovery allowance, a short-term payment offering support to people whose income has been affected by a disaster. There are some joint state and Commonwealth emergency hardship assistance grants available, helping cover costs of items such as food, medication, clothing. That's both for individuals and for families. There's essential household contents grants for people who have lost things like their beds, their refrigerators, white goods, anything like that. And then, there are plenty of services as well. We've seen, the Red Cross come to support people. I think last reports are that the Army has now arrived in Lismore to help with some of the cleanup there. We're seeing the same happen up in Queensland, but we do want to make sure that anyone who needs help can be accessing it at this point in time, because it's going to be a recovery period that's months and years, if not. It's not just the here and now. It's not going to be over tomorrow, even if the floodwaters do recede. So all those people are in our thoughts. And please reach out at editor@smartpropertyinvestment.com.au if you do know of other people who are offering their help or the provision of services at this time. We'd love to hear from you, and we'll try and get as much information out as we possibly can on that.
Yeah, and we'll be continuing to, cover how things are going up there from a real estate perspective. So just please continue to keep us informed. We want to make sure that we're always providing information and help and being that circulator of important info in times like this.
And as we mentioned earlier, it will be something that we're continuing to cover too, purely for that economic burden that the floods will be causing, because that will push back a lot of leading indicators for the Reserve Bank's calculations around how they work out what that cash rate is going to be, when they make that decision on the first Tuesday of each month. And the lead up to the federal election, I think, unfortunately, could politicise this natural disaster. And we will see, what the government's response will be to that, I think, as well. We've talked about housing policies for a while now, Juliet, probably forming a cornerstone of what the federal election could be decided on or argued about. So that's going to be something where we don't have any more information than what we have already provided previously at this point in time. But it is very much for us to watch this space, and we'll be sure to keep everyone informed when we do know more.
Absolutely. And yes, we'll be examining all of the economic factors that are impacting, the housing market and Australia's economy at large as the year progresses. And, let's not forget, of course, too, that massive geopolitical conflict happening in Ukraine will also have an impact on Australia's economy. And so while, our thoughts first and foremost are really with the people of Ukraine and looking at that presently, we are certainly aware that there will be some things that trickle down into the way Australia is operating. And so we will be keeping an eye on that. And we'll be covering how that affects a number of different things in Australia, including, of course, importantly, the property market.
Yeah, our thoughts are with the people of Ukraine at this time. There's obviously some really awful things going on there. We've seen a lot of footage that isn't very nice. It is something that is affecting a lot of Australians as well. But I think as well, it even raises questions around the refugees that will be coming out from that area of Europe. It asks questions of our own migration policies, which have been recurring. But, the government had hoped for a return to international migration in 2022, and that's all going to play a part in what the Australian property market does become in 2022. So as soon as we know more about all of these things and what some of those trickle-on effects will be, we will be sure to keep you updated here on SPI, because, it's really important for everyone to be educated and aware on how these could impact not only the housing market, but, on an individual level, what it means for people across Australia and society. So that's as much as we can provide you on that at the moment. But, we hope you've enjoyed this editorial update. Tried to unfortunately, it wasn't a very exciting one, but, there's a lot going on, a lot of information to be shared. And hopefully, this recovery, especially in New South Wales and Queensland, happens sooner rather than later with the floods, and everyone can be accessing housing, and the prospects remain good for property as an asset class in Australia. So stay in the loop with all the latest episodes of the Smart Property Investment Show. We hope you have enjoyed this episode. Please like or review us on whatever platform you're using to listen in. And if you do have any questions for us here in the editorial team at Smart Property Investment, don't hesitate to reach out. Our email address is editor@smartpropertyinvestment.com.au. Stay up to date with all the latest news on our website, as well as our Facebook, LinkedIn, and our Twitter. That is all we have time for today. Until next episode, stay safe and well. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Looking to secure finance to maximize your returns on your investment property? Finny can help. With access to over 70 lenders, Finny can find the right finance for your unique situation. So whether you're ready to refinance for a better rate, improve your cash flow, release equity to grow your portfolio, or are looking to find the right finance for your next purchase, we're here to help. Visit finny.com.au today to learn more.